Hey everyone. Of course, travel is rebounding explosively following the COVID-19 pandemic when many people delayed vacations, delayed traveling because of all the restrictions and because of fear of contracting COVID-19. So, I wanted to look for a stock that could benefit from that rebounding travel trend. And in this video, I'm going to compare Carnival Cruise Corporation with Booking Holdings to see which one is the better travel stock to buy right now. So I'm going to compare these two stocks on several different metrics, and at the end I'm going to look at valuation, and then finally I will answer which one is the best travel stock to buy. So let's start with annual revenue comparison. You could see here a 10-year chart of Carnival in the purple and Booking in the orange, and a similar trend. They were growing very nicely, and then the pandemic caused sales to absolutely collapse. More so for Carnival than it was for Booking. Remember, the cruise lines were the latest to reopen, the latest to get approval to start operating again. But you could see here Carnival rebounding sharply with revenues of 12.17 billion, and it wouldn't surprise me if after this summer's travel season Carnival's annual revenue rebounds, or Carnival's trailing 12-month revenue rebounds higher than Booking Holdings annual revenue. The next thing I wanted to look at is the cash flow from operations to sales. I wanted to see how good these companies are at turning sales into cash flow. And looking at this metric, Bookings has done an excellent job. From the year 2000, you could see absolutely explosive growth in terms of cash flow from operations to sales, rising all the way to 33.58%, an excellent margin. Carnival also had an excellent cash flow from operations to sales. That is until the 2010s when that started to decline. The company was doing an excellent job rebuilding that cash flow from operations to sales until the pandemic disrupted the business. Still, 28.44% cash flow from operations to sales is excellent, especially considering the company's not yet fully recovered to pre-pandemic levels of sales. So when it does recover to that, you can expect this metric to rise even further from here. The next thing I wanted to look at is the operating profit margin for the trailing 12 months. And for this metric, I looked at it from June of 2012 to June of 2019 because the pandemic caused a lot of disruption in this metric that made it much less informative in 2020 and beyond. So let's look at these two in their times before the outbreak. And you can see here Bookings much more profitable than Carnival at an operating profit margin of 35.79%. That's an excellent operating profit margin regardless of industry. You will be hard pressed to find very many companies that have operating profit margins above 35%. Carnival has done an excellent job in its operating profit margin as well. Even this is before the outbreak, increasing it to double digits above 15-16% for several years consistently, and the lowest it ever got was 8%. Now remember, Carnival, one of Carnival's biggest expenses is depreciation on the ships, and this is a non-cash expense. It paid for the ships maybe a decade or two ago, and now they're operating them, generating cash, but they still need to account for that on their account income statement as an expense. That's why Carnival's cash flow from operations will always be better than its profitability. The next thing I wanted to look at with these two companies is long-term debt, and this metric really increased for both of these travel companies. Carnival carries $10.3 billion in long-term debt, while Booking carries $8.6 billion in long-term debt. Now, if we look back at their revenue of 17 billion and 12 billion, and you consider that they were both above 30% cash flow from operations, if their operations rebound from the pandemic lows and travel continues to increase and return to pre-pandemic levels, they can generate sufficient cash flow to pay down the debt won't be a problem. However, if there's any other kind of disruption to their business, say for example another outbreak or a massive economic recession that causes travel to decrease, then this debt could be a potential problem. And finally, let's look at their valuation. Carnival trading at a forward PE of 16, Booking's trading at a forward PE of 16.3. So very similarly valued stocks here. However, if I had to pick one of these two travel stocks to buy right now, considering everything we just looked at, comparing them on across a multitude of the metrics we looked at, I would pick Booking Holdings stock to buy right now over Carnival Cruise stock. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.